What's up, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be looking at 8 stocks to consider buying in the month of July 2024. The first one on my list is going to be the NASDAQ Index Fund. And the one I'm using for this is going to be ticker QQQ. I just started buying this the last couple days. So as you can see, I got 8 shares at $459. And for all these stocks on my list, I do have positions in all of them. Some of them I just started and they're not big positions yet, but I do own a somewhat of a stake in each one. So the NASDAQ, this is probably one of the safest things you can invest in, period. But right now the price has been coming down. We're I believe 13% off the highs or something like that. Let's see, in the last the peak was $502. Now we're 447. So just in the last month, we're down what, over 8%, maybe 11%. So this is, I would say, I would be surprised if the market went down more than 15%. I would expect it to bottom right along these numbers. So maybe like $435. I would say I could see that being a bottom for this. I just think that the odds that we have a significant crash of, let's say, over 20% in the index fund like this, when we're coming off of, just a couple of years ago, we had this ginormous crash that lasted over a year long. I think the odds are very slim that we're going to have another significant crash. Normally, I believe the statistic is every 2 years on average, we have a 10% drop. That's roughly the average. So right now let's see, what are we? We just hit over 10%. So that's why I don't think it's going to go down too much more. I could see another 5% maybe. That's why I'm really thinking along this $435 mark. I would expect to be somewhere near the bottom. But regardless of where exactly it bottoms, whether it's 448 or whether it goes all the way down to 400 or under 400, it's still a good investment. It's still a good buy, even at these prices. As you can see, I got 8 shares now, but if this thing keeps dropping, no matter how far it goes, I'm going to keep buying it over and over and over, because this is one of those things where it's almost a guaranteed return on investment, and trying to time the market and get it perfect it's pretty much impossible. So you kind of just have to keep throwing money at it, and then you might have to wait a couple months, but it'll go back up. And how I said, since we just had a huge crash 2 years ago, there's a 95% chance we're not going to have a huge crash this year or next year. So that's the way I look at that. The next one on my list is going to be Nike. This one I'm sick of talking about because I've been talking about it for several months now, pretty much because it's been at the same price for several months. So this is another one that's suffering, I believe, just because of the inflation and the economy we're in right now. But I guess you could say really, I was buying this stock even. No, okay, maybe I didn't. I was buying this stock. So I was buying the stock 75, 73. That's July 1st. So about a little over a month ago. So I would say for roughly a month, I've been buying the stock at $75. So this one I'm very happy with buying in at this price. As you can see, we're pretty much at a 5-year low here. So I think they're struggling in the short term, but I think with a brand and a company like this, I think it's one that's almost guaranteed to come back. They've been through a lot of things, and they always come back. Similar story to this one. This is the one I'm thinking of. This is the one that I've been talking about for a long time, and I've been buying it for a long time. So as you can see with this one, I'm down 16%. My cost basis is $90 a share because I've been buying it since, who knows, probably since before May, so probably April or even February, something like that. And this one, it's having the same problem where it can't really, ever since back in April or May when it dropped to $74, it's pretty much staying at that price. So we're just waiting to see when this one turns around. Once again, it's Starbucks. They have to do what they have to do. I think this one they were having problems with their drinks just costing too much. People aren't spending, $6 or $7 on drinks like they used to. So I think that's just a temporary thing because the economy right now is pretty rough. But let's say 6 months from now, 12 months from now, something like that, this stock, I think, the economy will be better, I would say. And probably before that point, even when some good news comes along and we get news from the Fed, or we get news from another company that says, okay, the economy is looking better, then we're going to see something like this that can jump up to $90 or whatever. So Starbucks is another one on my list. This next one has caused me the most stress on the list. That's Lululemon. This one I did not. This one was probably bad judgment on my part because I was really excited to buy it and I bought in too soon. So as you can see, I got a pretty significant position here. 13 shares at $372, which at the time I was happy. I was content with buying at that price, especially considering this stock 8 months ago was over $500 a share. 372 didn't seem that bad, but now we're down. We're down more than 50% from the highs, down what 54%. So now the P ratio is cheap. I mean, again, the stock is approaching a 5-year low. And this is another one where it's a higher end product. People aren't spending money on things like this like they used to. And so until the economy turns back around and people start buying things like this, it's a very similar story with Nike. This stock is going to suffer. The analyst estimates are not going to be, the price targets are not going to be good. Let's see, we got August 29th, a couple of weeks here, they're going to report earnings. Hope maybe something turns around then, but I wouldn't bet on that either. But this is what I like about this stock. Okay. I would say the bad thing, the bad thing about a company like this, or you could even, I wouldn't say it in Nike's situation because Nike's probably more reputable, but for a company like Lululemon, they have to stay up with the trends. They have to stay kind of mainstream and popular, and they have to stay cool pretty much, because if they don't, and they're not in the trends anymore, then they can easily go to zero and nobody cares about them and nobody buys their stuff. It's not like a lot of other businesses where it's a more predictable or steady business source. So, but this is where it gets interesting. This is where it differs, because if you look at their numbers though, look at how consistent they are with their numbers. The revenue has grown 21% every year on average for the last 10 years. And look at coming from 2004, $18 million of revenue, to last year they did 9.6 billion. So this company pretty much grows every single year for the last 20 years. So there's a very slim chance, there's a 5% chance, a 3% chance that this year is the year that they decide to growth pretty much is done and this company's done with and they go out of style. This could be the year, but I would say there's definitely not more than a 5% chance that's going to happen. Same thing with the net income. The other thing we're going to look at is the ROI. Their return on capital is phenomenal. Same thing here. Look at the net income. This one is a little bit more, I guess it's not as consistent, but it still is. Look at 2024, $1.5 billion in net income. And so now we're talking about a stock that's a $30 billion valuation. That means 15 times earnings, trailing earnings, even though it says 23 times here. Let's see. What does it say? Let's see. What are they projected to do? Because I just like seeing that they have that much consistency in growth and that much consistency in keeping up with revenue and net income. Let's see what the projections are here. So here we go. Forward PE of 17. That's more like it. And this company is typically trading at 25 to 35 times forward earnings, and it's at 17 right now. So you're nearly getting this almost half. I don't want to say half off, but almost. And look at their estimates are going from 14.2 for this year up to 15.5 for next year. So analysts the analysts have the revenue growing slower than they typically do. So 11% this year, 9% next year, right? So a little bit of a slowdown. That's okay. That doesn't mean that they're going to stop growing forever. It doesn't mean that trend is going to keep happening year after year. So to be honest, I'm really not worried too much. I mean, I'm a little bit worried because I'm down 37% on this, which doesn't look good. But I don't regret buying this. I regret buying as many shares as quickly as I did. That's what I regret doing. Because if my position was smaller right now, I would absolutely be buying more shares. But because I got $4,800 in here, I don't want to put in, I could buy another share or two, but it's barely going to change my cost basis really. So that my only mistake with this was I bought in too quick. Otherwise, I would absolutely buy more shares at this price because this looks you're getting a great brand with great return on capital numbers at a great valuation with a proven track record of consistent growth. So this is what I like to see. Cash and debt looks good. Return on invested capital 40%, and that's like their average. Look at, I mean, 40% ROI. That doesn't happen very often. So I mean, I might even buy more shares. We'll see about that one. Next up, this is one I have not really made a big position in yet. I've just bought what? Let's see. I think I got 4 shares. 4 shares because the stock actually dropped today 5%, and then this week it's down what? Probably, yeah, 9%. So I only got 4 shares because it's still, you know, if it went down to like $100 or below $100, then I would make a real position in this probably. But it's kind of been, you know, just jumping up and down in this 140 range. So it's like I'm keeping an eye on it, but I'm not super eager to start making a position. Now I heard, let's see, Airbnb, yeah, Airbnb is on watch as earnings approach and with European backlash seen as a new long-term risk. I'm bullish on Airbnb long-term just because I think they have the brand name. They're the most popular company in their space. They have a super strong competitive edge compared to hotels, compared to other things like Vrbo. And so I'm happy to buy Airbnb. I think it's a great business model. I think it's a very profitable business model. I think there's always going to be people who want to go stay somewhere else, and there might not be a hotel there, but Airbnb gives you millions of options to stay a bunch of different places. So I'm happy to be buying Airbnb. Next up, this one is not on Robinhood. This is one this is a over-the-counter stock, but again, the financials on this are fantastic. It's the ticker's EVVTY Evolution AB. They pretty much, I made a video on this on my channel, so if you want to go learn more about it, you can watch that. But pretty much they develop, produce, market, and license live casino and slot solutions. So I'm looking for the same things here. ROI was super strong, 53% for all these years, and then now they're growing it back. It was 26% last year, which is still great, but it's getting better and better every year. Cash and debt, they got almost $1 billion of cash and under 300,000 of debt, which is fantastic there. Then we got net income, last 10 years, an average of 65% growth, which is insane. Just think about that for a second. That's you don't see that ever. Revenue, 46%. Last year they did almost $2 billion of revenue. So, and this is a $31 billion company. So I like this. I bought 10 shares of this, and if it goes down more, I'll buy more. Then we have CDNS. This one I've owned for a while. This is one where I did the same thing as Lululemon, and I was excited to buy this, and so I bought in, I think around $300, and I just jumped in really quick. I probably should have waited, but I'm happy to be a shareholder of this company, so it doesn't really matter. This one is outstanding in all the other categories too. Last 10 years, 20% growth for net income on average, $1 billion in net income last year, $31 billion company. Let's see. Lots of consistency here. The ROI is super strong, 31%, and it keeps getting better and better. They're in a super good industry with semiconductors, so I like that one. I will say the valuation is roughly high, but that's just how it always trades. Next one, the last one on the list is Amazon. This one is just recently was dropping a lot. And this is one where I feel like it's not going to last long. This is one where people want to, especially big money in Wall Street and stuff, they want to put money in this. So I'm sure this one will be bought up within the next couple of weeks. If this stock wants to come down to 140, that would be outstanding because then I'll buy a bunch of shares. But it could just stay in this 160 range, and if that's the case, then it is what it is. But Amazon is one where, you know, it's almost easy money. So yeah, those are my 8 stocks to consider buying, and I think all these have great potential going into the future.